In this video, I'm going to be showing you an Ichimoku Cloud strategy that will make you crazy money trading binary options. I'll be converting a complex Ichimoku Cloud strategy into a simple, easy to understand strategy that will allow you guys to make consistent profits over time. So, what is the Ichimoku Cloud? Well, it's a cloud, that's pretty obvious, right? But there's a lot more to it. The Ichimoku Cloud is a technical indicator that provides us with the general trend of the price in the market. The Ichimoku Cloud indicator consists of 5 lines that show support and resistance levels, and I'm going to be breaking down each one of those lines so that you guys can have a better understanding of what they're used for. So the first line that we have here is the blue line, which is the conversion line, also known as the Tenkan Sen. Now this line shows short-term price movement, and on its own it can be used as a midpoint price over the last 9 periods. The second line that we have here is the red line, which is the baseline, also known as the Kijun Sen. Now this line shows short to medium term price movement, and on its own is the midpoint price of the last 26 periods. The third line on the Ichimoku Cloud indicator is this green line over here, which is the lagging span, also known as the Chiku span. Now, this line is created by plotting closing prices 26 periods behind the last candle. So what I mean by periods is candles, right? There's a 26 candle delay between the price and the lagging span, and this applies for all time frames. The lagging span can also be used to identify the momentum and potential trend changes in the market. Now, the last 2 lines are the leading span A and B, also known as the Senkau span A and B. Together, these lines form a cloud known as Kumo. Both of these lines act as support and resistance levels, and when there's a crossover between the leading span A and B, this signals a trend change. Okay, so now that you understand the basics of the indicator, the Ichimoku Cloud still looks very complex and intimidating, but with the right adjustments, we can turn this indicator into one hell of a monster. To add the Ichimoku Cloud indicator to your chart, you want to go to the indicator's icon, and in the second column bang in the middle, you'll see Ichimoku Kinko Hyo, and you want to add this indicator to your chart. Once you've added the indicator to your chart, it should look something like this. This is the Ichimoku Cloud indicator, it just has a different name. Now, the chart does look a bit messy with all these lines, but once we've changed a few things and once I've explained to you guys exactly how to use this strategy, you'll see right through the mess. So we're going to start off by changing a couple of things in the indicator settings. What you're going to want to do is click on the pencil in between the eye and the cross. Here, we're going to leave the inputs as is, and then we can head over to styles. All we're going to do is change a couple of the line colors to make it a little more clear to see exactly what's going on. Just keep in mind that these lines are in Japanese. The Tenkan Sen is the conversion line, the Kijun Sen is the baseline, the Chikou span is the lagging span, and the Senkau span A and B are the leading span A and B. I probably butchered those names, and any Japanese viewers are probably laughing themselves to death right now, but it doesn't matter. All we're going to do is change a couple of these line colors. So we're going to start off by changing the conversion line from yellow to dark blue. Then we're going to change the baseline from red to pink. We're then going to change the lagging span from light blue to white. We're going to keep the leading span A green. And then we're going to change the leading span B from orange to red. Once you've done that, you can click on save. Once you've made the changes to the indicator, it should look something like this, a lot cleaner and easier to read. Okay, just to recap, the blue line represents the conversion line, the pink line represents the baseline, the white line represents the lagging span, and the green and red line represent the leading span A and B. Okay, so now that we have everything set up, you're probably wondering, how the hell does this strategy actually work? To open a buy position, we need to wait for multiple confirmations provided by the indicator. The first confirmation is provided by the white line, the lagging span. We need the lagging span to cross above the cloud, which indicates a bullish trend. The second confirmation we need is the blue conversion line crossing above the pink baseline. The third and final confirmation we need before opening a buy position is we need to see the price above the cloud. So we need all 3 confirmations to correlate before entering a buy position. The same applies for sell entries, just the opposite. Before we enter a sell position, we need to wait for our first confirmation provided by the lagging span. We need to see that the lagging span is below the cloud, which indicates a bearish trend. The second confirmation we need is a crossover between the conversion line and the baseline towards the downside, and it's very important that this crossover happens below the cloud. And the final confirmation we need is the candles trading below the cloud. Once there's a correlation between these three confirmations, it would be a great time to enter a sell position. So now that you understand the basics of how to trade the Ichimoku Cloud strategy, I'm going to get into a couple of examples on how to trade this strategy effectively before I get into some live trades myself. So ideally, when it comes to trading this strategy, you want to be using the 1 minute time frame. You can also use the 5-minute or 15-minute time frame, it doesn't matter. Personally, I don't like to hang around in the market for too long, so therefore the 1 minute time frame is more suitable for me. But you can use whichever one of the three time frames you want to use, it doesn't matter. Now, when it comes to opening trades, you want to open positions 3 times the time frame you're using. So if you're using the 1 minute time frame, you want to be opening 3-minute positions. If you're using the 5-minute time frame, you want to be opening 15-minute positions. And if you're using the 15-minute time frame, you want to be opening 45-minute positions. In this case, I'm using the 1 minute time frame, so therefore I'd be opening 3-minute positions. So what I'm going to do is show you guys some examples of trades and exactly what to look for when entering the market. I mean, right here we have a great example of a buying opportunity. We've got our first two confirmations, the price and the lagging span both above the cloud. And if we zoom in real quick, we can see that the conversion line crosses above the baseline towards the upside, which would be our third confirmation. Because I'm on the 1 minute time frame, we'd be entering a position on the close of this candle over here. So that would be a 1, 2, 3-minute position, quick and easy, and that would have been a beautiful trade. Now here we have a great example of a selling opportunity. We've got our first two confirmations here. We've got the price and the lagging span both below the cloud. And if we zoom in here real quick, we can see that the conversion line crosses below the baseline, which would be our third confirmation. So we'd be entering a sell position on the close of this candle over here. So that would be a 1, 2, 3-minute position, and that's happy days. Here we have an example of a trade that you would not want to take. You can see the conversion line cross below the baseline, but the candles in the lagging span are above the cloud. As you know, we need all three confirmations to correlate, making this an invalid signal. Alright, so at this point, I'm pretty sure you guys know how this strategy works and how to trade it effectively. And on that note, I think it's time to get into some live trades. So sit back, relax, and enjoy. So it looks like we won 2 out of the 3 trades, walked away with a little bit of profit there, but from my experience, the Ichimoku Cloud strategy is insanely profitable overall and can set you up with some pretty amazing trades. At first glance, the Ichimoku Cloud can be very complex on the eye, but once you break down each of its components, it's real simple to trade and understand. But anyway, I hope you guys learned something new today, especially about the Ichimoku Cloud. And if you did, go ahead and smash a like on the video and subscribe to the channel if you are new. And I'll see you in the next one.